Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at some macro charts today for Macro Monday on the legacy side of things. We had a good inflow day on the ETFs Friday, which may have just been all basis trade related. Basis sort of collapsed from 22 down to 9. So I'm sure there's a lot of ARB going on there, some end of year, beginning of year stuff happening on that front. Options volume has come down. Futures volume has come down quite a bit as well. Open interest, I'm not too concerned about at all. We have options now where we've never had options before. We are probably going to see the same and have seen the same for ETH. OI on CME has jumped quite a bit. You're going to see that jump even more when options come for those ETFs, and activity on ETFs for ETH has really just been kind of sad so far. I haven't really seen much of anything super notable. And that basis has dropped from 22 down to 15-ish. Another way to think of basis is just leverage in the ecosystem, or a way to measure sentiment, exuberance, leverage in the ecosystem, that sort of thing. So far, so good on that front. Today we had the beginning of a long 4 years of back and forth between Trump leaks to press and Trump denying those leaks, Trump seeing the reaction in the market, and then Trump reversing himself. So it's Trump versus Trump, basically, is what we're probably going to see for the next 4 years. So have fun with that. Strap in, get ready. But what happened over the weekend, we had a report from Washington Post saying that the tariffs are going to be more targeted. Then this morning, Trump denied that, saying they're going to be broad. It's going to be a shotgun. It's going to be a bazooka. And then he saw the market reaction to what he had said. And now they're walking that back again on Bloomberg. But it didn't really matter for BTC. BTC really enjoyed DXY just breaking the fever, the bullish fever, coming down, getting some bearish volatility for once. And as Kevin from Schwab says here, Trump just whipsawing himself back and forth, right? But so far, so good for BTC, still around 102,000. MSTR as well, pulled up quite a bit. Still not for me, just not a trade that I can see here. Much rather trade this at 430 or lower, 250 or lower. If this goes to 250, that means BTC probably closer to 80. So at 102, it's harder to call, air quotes, 80 when we're at 102. Breaking above 100 in a big way like we did today is what you wanted to see if you were bullish, expecting us to invalidate that head and shoulders. We also had a bit of a discount on Tether. Again, as a sentiment gauge, if we're talking about liquidity in the ecosystem, the purple line there is Tether circulating supply, and the white is the Tether price on Kraken. You'll notice as the Tether price goes above $1, we tend to see more stablecoin issuance. That tends to represent demand for stablecoin, demand to deploy into the ecosystem effectively. So as that is coming off, as that went to a discount slightly below the market rate, not the peg. Peg never changes, despite what people want to tell you. The peg is $1. The market rate can be infinity. It can be negative infinity. But as this went below the dollar market rate, so too did the supply below all-time highs, and you had some redemptions from Tether. So this is definitely something else to watch. Over the course of Q1, do we see a Tether premium pick up again? Do we see stablecoin flows picking up again? Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro at the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. On the 4-hour cloud, we were talking about this last night, we've breached that. It was, I guess, exactly 99.8, not quite 100, but good enough at this point. The risk of whatever this may have been, probably over. We had a new higher high above an existing right shoulder. We almost have a higher high above a left shoulder. The longer this can hang out up here, the better. We don't need to see God candles. We just need to see acceptance of the 100K level, and we can do just fine from here on out. The daily cloud is still iffy to me. It's just unusual the way this has looked. Not something you see too often, where we didn't quite get to the Kijun, we didn't quite get to the cloud, we broke the Tenkin, now we're reclaiming the Tenkin. So it is what it is, but definitely not bearish, right? We broke back above the daily Tenkin, so we should be good to go for a little while here. Looking at the calendar this week, the big things are job openings, JOLTS tomorrow, ADP employment on Wednesday, and then the unrate on Friday. This may help push BTC one way or the other, depending on what this level is, depending on what the market's expecting. If the market's expecting 4.2 and it comes in at 4.2, maybe that's bullish. If the market's expecting 4.2 and it comes in at 4.4, maybe that's bearish. Maybe good news is bad news is good news, maybe bad news is bad news. I don't know. Like, we'll see, right? So it's hard to say. But if you're just trading the chart, looks pretty good. Looks pretty good. Looks like a failed head and shoulders at this point. Inflation appears to have paused at around 3% on the real-time gauge, which is good. Last week I was seeing in my feed a bunch of people discussing their rents coming down year over year. So that will help pull inflation down as well, especially on the real-time gauges. But what we don't want for anybody's sake is inflation surging past 3%. And that's definitely something to watch for throughout Q1 and throughout 2025. The higher inflation goes, the higher the inflation expectations go, the higher rate expectations go, the higher rate expectations go, the lower risk assets probably go, and the more they have trouble just continuing blindly here with these valuations. Looking at the Fed's own inflation estimates, it looks like we do have CPI coming down here 6 days into January. The rest of these gauges basically flat month over month. So we'll take it. We'll take it. Especially coming from 1 3/4 to 3. That was a pretty big jump pretty quickly after those rate cuts. Now on the rate probability side, we aren't seeing a rate cut expectation in the near term here. Currently, markets are pricing no movement whatsoever in rates at the end of the month, as well as in March, no meeting in February. So a lot can happen between now and March, including Fed and JPOW fighting over rates, whatever. Trump saying something about bringing rates down, Trump talking about installing a shadow Fed and then taking it back and then saying it again. Like, a lot can happen. It's going to be, like I said, an interesting 4 years because Trump is certainly a Fed watcher and certainly a market watcher. GDP has turned down quite a bit as well, from well above 3 to now somewhere around 2.4. This is just an estimate. Still above 2%, not in recession territory, but definitely something to continue watch into Q1 with whatever policies we see coming forward down the pipe here and how that affects all these big macro numbers. Looking at the yield curve across the board, red here signifies inversion, green being the natural state. And you can see across the board, most of the yield curve has normalized here. If we just contrast this to the end of October last year, we still had pretty deeply inverted yield curve. So nature is healing in the yield curve front, and this may also further trigger recession calls because that's just what we've seen. We've seen when the yield curve uninverts, a recession eventually shortly thereafter. Is this going to be the time when that doesn't happen? Can recessions happen anymore? We'll see. But if I was blindly looking at this chart in a vacuum, saying when could a recession happen, it would be between now and the next year and a half. Add this to the list of interesting things to navigate for the remainder of the year. Looking at bonds across the board, mostly moving lower, especially in the long end, short end sitting tight, but these are not bullish charts. Again, if you're trading any of this stuff in a vacuum, not something that you're buying with both hands, most likely, at least not for me. I'm not a range trader. I don't like buying range lows. I like momentum. I like breakouts. None of these look as bullish as they did in June, July last year. They all just look like failed breakouts to me, and they look at risk of going lower across the board, especially TLT. TLT is almost, I think that's the all-time low in October, November. So that's definitely one to watch over the course of the month. Now, because DXY is violently swinging around, S&P also violently swinging around. You had a gap up today. We have probably what amounts to some sort of gravestone doji or something here. Just, again, a lot of chop, a lot of still in the range, still trying to make a decision here. Is this a macro head and shoulders? Is this a lower time frame W? Are we going to see continuation beyond January 20th? not a lot of convincing setup material for me here on the S&P. And this is, of course, the the tweet or whatever you want to call it from Trump this morning. We did have SMH break up. Yesterday we were talking about that 260 level. So that probably means NVIDIA broke up, which it did. This is the low time frame head and shoulders on NVIDIA that's also getting negated, invalidated. This measures to 165, 175. The broader move that we never quite reached to maybe around earnings is 184, 217. Maybe this is the next kickoff point for SMH. Certainly doesn't look as bearish as it did. Is there a trade here is the question. I don't know if there's a trade here for me on SMH, but I don't hate it. I don't hate it on NVIDIA. I don't hate it on SMH whatsoever. There was a trade last week that we've been talking about since probably October that had a big day. I never talk about EVs other than Tesla. So I thought today would be a good day to look at the sector, look at some charts across the board. They kind of look like the miner charts, the Bitcoin miner charts. They kind of look like altcoin charts a little bit. So just a very interesting chart study. If you've got a sector that you want me to take a look at that I haven't, let me know. I like to keep these fresh and do some different things that we haven't done other than talking about the Mag 7 endlessly. So this is EVAV. It's the 2X EV ETF. Fairly illiquid. You can see that by the way these candles look on any given day. But the go signal was this inverted head and shoulders bullish cloud breakout. And we got our move over the past couple of weeks, recently today hitting that target zone. So if you've been in this for a while, one thing you could do, and one thing I often do with crypto, is if I'm trading leverage, I will just close the leverage position either partially or completely and rotate that into the spot position effectively. With these leveraged ETFs, you are eating volatility drag and fees. So that's one reason not to hold these for an extended period of time. You probably don't want to hold these for multiple months and kind of trade these from impulse to impulse. That isn't to say that closing everything today is necessarily the correct thing to do, but it is up quite a bit, quite quickly. And it has reached the soft target, let's say. So these are the holdings outside of the cash management positions and the leveraged management positions of this ETF. So let's go through and look at each of these and what I would do, what I'm going to do for my own positioning here. Some of these, I don't know anything about these companies. Let's just be honest, right? I don't need to know anything about these companies. Some of these balance sheets probably look horrific. These evaluations look awful. I'm sure some of these may or not go to zero, go bankrupt, get acquired. I have no idea, right? This is not that discussion. This is, what does the chart look like today? Would you buy this today? What does it tell you? I think this one had an AI deal with NVIDIA or something, and that's why it really took off. And this was a majority of the gains in EVAV. Not something I would rotate into here. Maybe something to keep a watch on CRNC. But a lot of this move certainly happened. It's gone from 3 to 20. I mean, that's almost a 10x very quickly. It probably hit 30. So it probably hit a 10x in a month. Pretty wild move. That's altcoin moves, right? So not something I'd touch here. RIVN is in my wheelhouse because it's held below the high time frame cloud here for years. It is just chopping down for years. Again, this is not a comment on the company. I'm just looking at the chart. The chart says, yeah, this is a decent play. So if I'm rotating out of EVAV and still like EVs, this would be one place to go. Tesla, a little bit tougher up here, certainly better at 270. Now the valuation in Tesla is absurd, obviously. You're not really trading that. You're trading Musk's proximity to Trump. So if you're bullish on that, you probably love Tesla here still. The double bottom, ascending triangle, whatever you want to call it, target is between 5 and 8. And the ultimate high to low target would be like 1,000 to 1,600, which, hey, we might see over the next 4 years. I don't know. But if I had a choice between the 2 or the 3 here, it would be RIVN all day so far. XPEV is another one. I just like the chart. We can talk about Chinese versus not. We can talk about tariffs on XYZ. None of these trades make sense. I'm not going to disagree with any of that. I'm looking at the chart. The chart looks good to me. This looks pre-breakout. You could certainly wait, see what happens after January 20th. But definitely a very interesting setup on that one. MBLY, another one, starting to break out of the daily cloud. Another option for position rotation in NEO. Another one certainly looks like it's ready to make an attempt out of this multi-year downtrend. Maybe an IHS at the bottom here. Maybe. We'll see. But anything above 6, and this should be good to go. And another thing you can do is just set alerts on this stuff. Do something else with your life. Alerts at 6 on NEO for RIVN. I think this is a good enough spot to start nibbling at a position. And MBLY looks good just based on the daily cloud. NEO to me looks a lot like Oxy, which is one of Warren Buffett's darlings, starting to get out of this multi-month downtrend, trying to get back into the cloud. Still probably a little bit early. He probably doesn't care. I'm sure he doesn't look at the technicals anyway. He's just looking at valuations and where the puck is moving. But this could make an inverted head and shoulders. This kind of looks like the ETH BTC chart, right? Anything above 52 and it's probably good to go. But I think it may take some time here to make the right shoulder, get the cloud flipped, and get things bullish again. So it looks a little bit early on that one. LI, this looks like all of the Bitcoin miners, right? Just endless chop, not something for me. This would be a massive avoid. Indie Semiconductor, also just downtrend, not really much going on here. Certainly not a bullish chart. And as we look at these charts, it kind of makes you wonder, was this a mistake? Looking under the hood here, right? Because the more I look at these charts, the more I don't want to hold EVAV. I'd rather rotate into something else. HSAI, no idea what this is. Definitely looks a little long in the tooth, a little late to the game here. The breakout was at the 5-6 region. But seeing how some of these charts looked and are breaking out can sort of give you an understanding of why EVAV has broken out like it has. Lucid is another one, just endless downtrend. Maybe this tries to break 4. Maybe this goes bankrupt. I don't know. But the cloud would start to like it above 4, maybe later on in the year into Q2. So I like alerts on that one around that level. GNTX, I do not like at all. This looks horrible. This looks like bearish breakdown, head and shoulders. Definitely not for me. EH also maybe South Korean, Chinese. I'm not sure. I'd have to double check, but looks like a mega ascending triangle potentially in the making here. Again, kind of looks like Bitcoin miners. But to me, this if this was a Bitcoin miner, it would look better than most of the Bitcoin miners in that it's still consolidating in a bullish fashion. It's trying to break that $20 level. And it's going to be interesting to watch head to head over the next year, which does better or which industries do better that are all kind of electricity adjacent. There's nuclear we could throw in there. There's a few other things in the tariff conversation. But this chart certainly looks fairly decent. BWA, just endless chop. I don't really see anything here above 45. It looked better, but not something I would touch down here for me personally. Polestar Automotive also trying to end a downtrend. Maybe something to watch later on. Something above 170. I mean, the risk here, obviously, on a lot of these is just total loss, right? The risk is going to 0. So if you size this appropriately and you just say, all right, this is going to be a binary bet, basically. This is going to be either 5 to 10x or 0. Then you size that down and you just let it be. But the cloud almost likes it here on the 2-day. QuantumScape, this must have been one that someone asked me about because I had some annotations here, but it does look like a falling wedge coming to an end. And again, it's been down for 4 years. Why not, right? Like this cloud is telling you we may be reaching a time where this could do well, and you might get a nice little move off of something like this. ChargePoint Holdings, this just looks like death. Just endless downtrend. I'm sure there's a bull div on this, but it's definitely not for me. It needs to go sideways a little bit. Luminar, LAZR, same thing. Just endless death. Endless down for years and years and years. EVGO broke out of a nice downward parabolic falling wedge mid last year. And maybe another one to watch into 2025. Not anything I would touch here. And then lastly, Nikola also just looks like absolute death. And you can see how the EVAV chart got its falling wedge to the downside with charts that look like this. So if I had to choose anything and I had to make a list, it would be RIVN, XPEV, MBLY, and EH. Those I like today. EH you could probably wait a little bit if you wanted to, but I still like it today based on the duration. It's sat in this thing. I also like QS today. And then the 3 for alerts, or if you're brave, would be Neo, Lucid, and Polestar. Polestar probably on the alert status, not a position today. So that's all I have for this one. Something different, something fun. Let me know if you want me to ever look at anything in the comments below. Like, dislike, comment, share, subscribe, and happy trading.